Good day, everyone. Well, we see that the averages are trying another bounce here, but once again, it looks quite anemic. We have the downtrend's fully intact. Oil's trying to bounce because of the OPEC news, but that is very much still ensconced in its downtrend. We have basically just a continuation of job owning by the Fed. Yellen is saying now that obviously negative interest rates are a possibility. Just by saying she didn't think there was any serious legal roadblocks to negative interest rates. At the same time, she's walking that tightrope because she's still leaning on hiking rates at some point later this year. So yeah, the markets are not real happy about any of this. The Fed really it's damned if you do, damned if you don't at this point. It seems the major averages are off, almost or at bear market territory in the case of the Russell. The Nasdaq is almost almost up 20%. The S&P is trailing at like minus 13 or 14. So we look like the leaderships in this market are more or less non-existent, and you can use these periods of these little weak bounces to lay out some more shorts. And that prior bounce that we had in January, I commented that that's the weakest bounce we've seen in years, and sure enough, then we now retested lows once again, and looks like for now we're probably going to head lower, but we have a lot of volatility. And some of these bounces, like the bounce even in January, that was the weakest we've seen in a long time, but that was still a bounce that went for about almost 2 weeks. And we could see a repeat of that right now. MDM is in cash, took its profits. It had a nice score on this downdraft. And we are obviously going to be diligent about looking for re-entry points on the downside. As far as commodities, they kind of do what oil does. Gold has been higher. That's the one commodity, gold and silver. But keep in mind that in this context, gold is more of an indicator of faith in governments. So as the price rises in gold, the faith in governments is dropping. And while this right now, things don't break apart overnight. It usually takes over a period of months, if not longer, just as like major tops take months to form. And we've had a major top form in the U.S. market, and in other markets, major tops formed quite some time ago. In some cases, a couple years ago. And the fact that gold is just skyrocketing relative to its prior action, I think this is the most pronounced uptrend gold has had, I think, since its huge run in 2011. So it's telegraphing to us in this context that not all is well globally. There's a lack of confidence in central banks, in Federal Reserves, and the U.S. Fed. And this streak that we're seeing, it's probably going to come to an end sooner than later. So I wouldn't try playing it up here, certainly. And keeping in mind that this stuff is fairly chaotic. It's very news-driven, and it's very hard to predict these news events to the day or even to the week. But it does seem that gold has embarked on a potentially major change in direction. That said, I would be surprised if it were to break to new lows over the coming months. It seems to me that we are at a tipping point, and all this QE nonsense that's going on, and then now negative interest rates in Japan, continued negative rates in Europe, it's not doing anything. The Japanese market was off another few percent. European markets topped back in mid-2014. So their negative interest rate program isn't helping. And these European markets, if you'll note that they're consistently weaker than the U.S. markets, who have not adopted negative interest rates yet. And if that negative rate situation does occur, I think that the penalty for keeping your money with government, with banks, it's going to be passed on to us. It's not going to be passed on to the U.S. government. So it's a bit of a that's also the issue of pension funds. I think they were saying that today that I think it's the UK is now considering government intervention in terms of the pension funds of British citizens, in terms of where that money can go. Can go into the government's programs. That basically forcing pension money into whatever type of infrastructures that they're cooking up right now. That obviously sets a very negative precedent for other pension funds around the world for what governments can do to their respective pension funds. And of course, we're talking many billions of dollars beyond that, actually. So these are very interesting times, as we've said. And with that, I will turn it over to Gil.
Good morning. I think getting to the gold thing, because I get a lot of questions about it. Do you want to go long gold? And my thinking is centered around the idea that, number one, we have a liquidity crisis that's probably a money crisis. You've got Japan going to negative interest rates, Europe's at negative interest rates, Sweden, which I don't think is an ECB member, right, Dr. K? They are also going to negative rates.
I thought Sweden was ECB, but yeah.
Well, they're not. They don't use the euro. I think they stuck to their Swedish kroner. Anyway.
And Norway uses its own currency as well, I believe.
Yeah.
But I think maybe it's interchangeable.
In any case, you've got as Dr. Case called it, the race to zero. Everybody's trying to devalue their currency, and Janet Yellen came out the other day and acted like things were on track to continue raising interest rates throughout this year. But what I noticed is that the dollar tanked pretty heavily on that testimony, and that doesn't seem to argue for interest rate increases going forward. Also, the rise in gold doesn't seem to argue for interest rates increases going forward. So my feeling is it's a move into what is an alternative form of money. It's also a fear bid as they're looking at currencies around the world collapsing and just heading for the downside and heading to zero. And so you see gold rallying on this basis. So I think it's basically an allocation. Remember, just a couple of months ago, back at the end of the year, everybody's talking about how gold is going below 1,000 and gold is done and blah, blah, blah. And that was pretty much the low. Nobody wanted to touch gold. Now everybody wants to jump into it. It's pretty extended here, so you really can't jump into it here. And I don't think you have to. I think ultimately, if we do have a money crisis, the idea that gold is going to save you, owning the GLD or any other paper form of gold, thinking that's going to save you, I don't think that really is going to work out that way. I think that a lot of the gold out there is paper gold, and I've heard numbers of, for every single ounce of physical gold, there's 100 ounces of derivative gold, paper gold, futures contracts, ETFs, whatnot. And if you buy the ETF, the GLD, is that, Dr. K, is that actually backed by physical gold, or is it backed by contracts?
It is not. That's why GLD could collapse.
Yeah.
Or that.
So my thinking is, if you really had a money crisis, then physical gold and physical silver would be what you need to own, not paper gold and paper silver. And you would see a decoupling between the physical price of gold and the paper price of gold. And if you track the prices like I do, gold is selling about $100 more an ounce right now than the price shown on the futures. So that's physical, and so there is a premium for physical right now, and that makes perfect sense to me because I think paper gold is just a promise. It's only as good as the other side of the transaction. So I don't really want to buy into gold. I think the move is telling you something, and so that's information that's useful. But in terms of it becoming an investment as a paper asset, it's troublesome to me. I do think that everyone should have a certain percentage of their net worth in physical gold. So anyways, just looking at the indexes, if we go to, you can see the Russell undercut its recent lows. The Nasdaq also finally undercut the August 24th low. So this sets up a potential for an undercut and rally. The only problem is you're not really getting that much of a rally. If you look at it, all you're doing, you're sputtering around after this gap down breakout here on Monday. You're sputtering around underneath these the 4,300 level, roughly. What is the low here? Like 4280 something, I think it is. In any case, you're not really getting back above it. And when you look at today's rally, while it might look impressive, it's just being caused by a 5-6% increase in the price of oil off the lows. On talk, remember, no action, just talk. And that seems to dominate the news when it comes to oil. Nobody's really done anything in terms of cutting production. They talk about it, but that it can spark rallies. But I think all this does is set up a shortable opportunity, both in the stock market, and I guess if you want to short oil, probably the same thing. But that's all you're getting. It's a news bounce, mostly being led by financials, which were just getting pummeled yesterday. I mean, yesterday there wasn't much on the tech side because the Nasdaq mostly was getting hammered from the new year on, as you can see here, this brutal drop so far in 2016, mostly being generated by high-flying big stock Nasdaq names. And those gave way and came apart in January and have been up until early this week. And now then we see financials, which have also been coming down. But on yesterday's action, they were leading the charts to the downside. You can see the XLF gapping down. And now today, with news that there might be some agreement among oil-producing nations to cut back on production, you've got them rallying with oil. So you can see how, people ask why isn't the market rallying in the face of lower oil prices? Isn't that positive for the economy and the consumer? Well, it might be, but the bottom line is, you have a lot of financials exposed to oil debt, and there's a huge amount of debt out there in the oil industry because they levered up to increase production when oil was well over $100 a barrel. So they all got levered up, and now they're getting lathered up. So I'm watching some of these names. You have JP Morgan rallying back up into potential overhead. I've been trying to put shorts out on it today, but I just keep getting kicked out. It keeps pushing higher. U.S. Bank is somewhat weaker. That's another one. You had a gap down breakout. It's pushing back up to fill the gap, so that's another one I'm toying with. But also some other names that I think are moving into shortable range. Panera Bread, I thought this breakout was shortable last week, and the stock busted, so that was a nice trade, and now you're rallying back and trying to break out again. But notice that you're up at the century mark, and here you have the weekly chart. You can see that Panera has failed at the century mark once before. So it wouldn't surprise me if it decided to do it again. So I think as it's coming up to the 200 level with the market up, you might look at it as potentially shortable here, using the 200-day, or I'm sorry, the 200 price level as a stop, maybe with 1% or 2% if you want to give it that much. I've got a little position out here and just hanging with it right now. Facebook has rallied into the 50-day. To me, this is a late-stage failed base. Blow it up here. So you see the breakout straight up from the bottom. It fails. Finds support near the 10-week line, but really what it did is fill this gap. I think we talked about this last week. And now it's rallied up into the 50-day moving average, which to me is a short spot here, and so you can put it out possibly. This high, I think yesterday is incorrect. I think the high so far in this bump up into the 50-day is 103.74. So I think that's in position. You've got McDonald's, similar situation. That's a breakout feather. This is sort of an ascending type formation after this gap up that we had back after earnings here in late October last year. You've broken out and you break down through the 50-day. You undercut this low just barely. See that? And they turn it back to the upside and into the 50-day, and you've come a couple of times up into it, once before 3 days ago and then today again. And generally, when you have a late-stage failed base, the first clue that you're failing is you'll have a breakdown through the breakout point that may or may not coincide with a breakdown through the 20-day moving average. So that's my first reference point. So when you see it busting here, sometimes you can catch a short and then look for the next available low as an undercut. And that's exactly what you did. So that would be a point to cover it and then let it rally. Now, typically on a late-stage failed base, you will see a couple of rallies up into the 50-day moving average. So so far that's what you've gotten, and it could sputter around. The 20-day moving average, the 50-day now becomes sort of a zone of overhead resistance that you'd be looking at. And watching some of these financials pushing, I wonder if this is where I want to come after them. We'll have to check them on the 620. We'll let them lie for now. So those are a couple that I think are in good shape as potential shorts if you're looking for something to short. Here's a Vago. We put out a short sale setup report out on, I guess that was last Friday morning. And the stock immediately busted to the downside. It's undercut this low. To me, that's a short-term cover point. So you bag your profit. That's a very nice profit of about somewhere between 15 and 20%, depending on where you got it off. Maybe closer to 16, 17. In any case, now I'd be watching either for rallies into the 20-day line at 125.99 or the 200-day line at 129.31 as potential short sale entry points. So market's pushing higher. You've got China opening up again. They've been closed all week for Chinese New Year. Do those guys know how to party or what? I mean, we just do New Year's Eve, and then everybody nurses a hangover on New Year's Day. And over there, they're going for a whole week, which I think is pretty impressive, actually. And they reopen, so they close their markets. They reopen on Sunday evening. We'll see what happens there. We saw what happened to Japan this week, probably taking the brunt of the selling since nobody can sell anything in China. Dr. K, is there a good ETF for the Nikkei? What do you look at?
EWJ.
EWJ, that's right. So there's the tank. I think down 11% for the week. That's pretty gnarly, I think. And it shows you, after exactly 1 week ago when the Bank of Japan went to negative interest rates, it shows you just exactly what negative interest rates are going to do for you, which is not much. And I think it's silly to think that this is a constructive way to handle the current global economic situations by just printing more money. There are a lot of systemic problems, and they just need to be expunged from the system. But politicians fear the pitchforks and the lynch mobs, I suppose, and want to keep things from collapsing on their watch. So maybe it's a matter of self-preservation and survival. But I think that it's not going to do any good. Here's something for you. Somebody points out that NYSE short interest keeps going lower and not a lot of fear even with the VIX popping. Yeah, that might be a sign of some nastiness to come. So we'll see what happens. Somebody says, I was always under the impression that all the retail investors could not redeem actual physical gold. The GLD is actually backed by physical gold held in the vaults of HSBC. So I would have to disagree with Chris's statement that the ETF is paper only. Dr. K, can you comment on that? What do you know for sure?
My understanding is that the GLD is very vulnerable because only part of it is backed by physical gold. Now, that information I got back in 2000, and remember Frederick? He was very critical of
right,
GLD.
Frederick from Belgium.
So it's been 4 years, and it's possible that GLD is different now. And if that's the case, I stand corrected. I'm actually looking it up right now to see what the story is. But does our member, is he saying that all of it is backed by physical gold now?
They claim that they have gold in their vaults, but who knows whether they do or not. So the only thing I know for sure, based on some of the reports I've read, is that there's way more paper gold for every ounce of physical gold out there. So the potential for paper gold to become essentially worthless in a true money crisis, I think, is there, definitely. And that gets to my point, which is if you really think you're being hedged in terms of currencies collapsing, the only way to be hedged fully is to be in physical gold or silver. That's my view. And that's my position. And I've had that position since year 2000, back in the days when the Fed was happily printing money where they started. How would one define paper gold? Well, a contract, futures contract is paper. You know, people don't necessarily take delivery of gold when they buy a futures contract. Their intent is to trade the move and buy the futures contract and then sell the futures contract. That's paper gold. An ETF to me is paper gold, unless it's fully backed and redeemable for physical gold, which I'm not so sure is the case. Go ahead,
Here's
Dr.
the
King.
case. You go to, well, it's commodityhq.com, commodityhq.com,
Uh-huh.
and if you Google that website with "Does GLD really hold gold or is it a scam?" and they have an entire discussion on the legalese of their prospectus. In other words, what they're saying is that on the surface, it appears that GLD is backed by physical gold 100%. But when you actually look at the minutia of the legalese, it's not the case. It's not the case, according to this. I'm just scanning the article right now, but yeah, it gives you all these different legal sections and then the translations of what it really means.
Right.
So basically, there can be no assurance that the requirements of the exchange necessary to maintain the listing, if we go into this legal stuff, will continue to be met or will remain unchanged. In other words, they can change that physical structure, the physical gold that backs GLD, they can change the amount at any given time, which doesn't put a lot of faith into
No.
this ETF being backed by 100% physical gold.
Right, and being naive enough to think that you're buying some solid asset when you buy it, I think that's just stupid. So, you know, pardon my frankness, but I do think it's naive of people to think that they're somehow hedging themselves by owning GLD. However, if you want to play a move in gold, that's a vehicle with which to do so. The only problem is if you run into a money crisis in the middle of it all, you might see your paper gold decouple from the price of physical gold. Anyways, we can get back.
A legal out. If that does happen, and we're in a tipping point in time here, so you know the odds of something extreme like that happening could happen within the next few years. But that said, GLD, of course, is one of the most respected, or the most respected gold ETF. I mean, it's not a scam, obviously. I remember hearing some people going to the other extreme and saying that GLD is a scam and it's going to blow up. It's not the case at all. It's a legitimate ETF.
Right. Okay, let's get back to the stocks. Did anybody short Workday with me last week? Remember I was shorting it last Thursday during the webinar, and you see that nice bust. I mean, that to me, that's a nice gain. I'm going to take that and cover it. I mean, that's over 20%, so you have to take that. In fact, I think it was cover it right around here on the first day down. Of course, it always goes lower if you cover it here on the big break, but you know, when you get that kind of a bust on a short, you have to take it. And of course, that coincided with names like Avago getting hit, Data, which was like a shortable gap down. But look at this thing. I mean, all of these high PE stocks have been getting hit. Splunk. I mean, I know someone was bragging to me that they had bought Splunk somewhere around the 54 level, you know, off the lows when it was doing this. And I don't know if they still own it, but just, you know, buyer beware when you think you're buying something cheap. When you get into a contracting PE environment, which is another thing we're noticing, because you'll notice how quickly they want to get rid of stocks that have high PEs, and that's because we're in a bear market. You know, people will argue, are we in a bear? Are we not? You know, are we down 20%? Oh, that's not a bear market. But bottom line is, once you get down 20-25%, it's kind of late. You're probably already taking a huge hit on most of your stocks, so it's kind of stupid to try and you know, I'm going to be like Donald Trump. He's made it popular just to call everybody stupid. So I think it's stupid to sit there wondering whether we're in a bear market or not. Like yesterday, I saw a MarketWatch.com article that it's now official. Dow is in a downtrend. Well, that's good. Today it's up 225 points, so it doesn't tell you anything. It's just typical BS that people want to define things in nice, neat little packages that aren't really relevant to precisely what's going on at the point where the rubber meets the road, which is with individual stocks. So, you know, you're in a bear market, but you've been in a bear market for a while, and if anybody pays attention to indexes like the Russell 2000, as we have done, it's been in a bear market since it peaked out in June of last year. Look at that. That's a pretty steady downtrend. We can put it up here, too, on a weekly chart. That looks like a nice downtrend to me. If that isn't a bear market, I don't know what is. So it's interesting to see that they're still rushing into the financials. So I'm just kind of waiting here to see if we get some sort of a rollover. Let's take a look at JP Morgan. I think there was news yesterday that Jamie Dimon bought 500,000 shares of the stock. But let's take a look at these on 620 charts, see where we are. Yeah, they're just humping this thing. Look at this. It's just pushing higher and higher. There's been no 620 sell signal. I thought you were going to get something in here, but this just pushes you right out. And now you're bopping to the upside, and you're coming up into the 20-day moving average. Maybe that's as far as it goes. I don't think that everything is hunky-dory with financials, with their big exposure to oil debt and the price of oil. So I would be looking at a point to short these again. On the way up, but you got to watch and see where it goes. So Panera Bread, we talked about that. I'm just watching it coming in a little bit, but it's still hanging right there. So I want to see some sort of a bust here. Maybe here's a 620 chart. It's kind of, you got the MACD cross here. That you see how the line, the histogram down here is actually negative as it pushes higher, so that may be telling you it's ready to give way. So I think it's a low risk short right here, using the 200 level as your guide for a stop. It did punch into it just briefly this morning. What was the high there? High of the day here was 199.87, so it got very close. So anyway, so you want to keep your eye on these. I think I still think you're in a shorting environment. It's just a matter of letting this rally play out. And you could see it yesterday, I thought, when the Dow went down minus 400. If anybody follows me on Twitter, I was saying that it looks like that last push means that the forced selling, at least for the day, is over. And now they're going to try and push this thing into the close. And they tried to, more or less, but it couldn't really get going. And, you know, that's just what happens. The forced selling comes into the market and it goes on for a while, boom, 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 and all of a sudden it disappears, and then whoosh, things start to rally back up. So it definitely keeps you on your toes, and you have to be wide awake when you're shorting things. And here's a short that's worked out pretty well for me. I shorted here right on the 50-day line because it looks like it's going to roll over. Now, I have previously liked this from here off the 50-day on the upside. But that all changed. If you look at this on this actually, you can see one pod on the weekly chart and then another pod. And these are two pods. You come up the right side and you reverse on heavy volume here 6 weeks ago. So that's telling you it's failing. It goes straight down for 2 weeks and then straight back up for 2 weeks. That is a topping sign. And so once it starts to do that and wobbles around the 20-day moving average, that's your first indication that things may be going awry with the stock, is when it breaks the 20-day moving average on the right side of a pod. If you guys read the new book on short selling, you can find out all about that and how we handle pod formations. But once that happens, now I'm keen on shorting it or looking to find a place to short it. And sure enough, you know, I got it on, that would be Wednesday, and the thing busts. It's coming down on lows. I'm out of it now, but it was a nice short sale profit. They come out with earnings next week, I believe. So you want to watch out here, because you may get a situation where if you get a rally back up towards the 50-day after earnings, that could be shortable. Now, on the other hand, it could just bust to the downside. But for now, this is a pod, and I think you have 1, 2, 3, 5, 10, 13 weeks on the downside, and then you go chopping sideways for 9 weeks, and then you start going back up again. 1, 2, 3, 10, 5, 10, 15, so 15 weeks to the upside before it fails here on the high. So, you know, that looks, to me, this looks toppy. And we saw Solar City got just destroyed, after earnings the other day on the gap down, and that thing's done. And then, of course, I thought SunPower was also shortable. You notice how it was weaker than First Solar, and it kept running up into the 50-day moving average, and you can catch a little fractal head and shoulders in the pattern there. You can see it on the weekly here too as well. And once it busted the rising trend line here, that was all she wrote, and it's broken down. It's down around the lows here. For some reason, I haven't been able to borrow SunPower, but I've been able to borrow First Solar to my heart's content. So, you know, that's worked out okay. So they're pushing this thing pretty hard. But you know what? Just hang loose, watch this. I already have shorts out on Facebook based on what we've seen on the 620, because we already had a 620 sell up here. I'm in about 103.60 or something like that. And we'll see if that works. But I'm watching these banks. I just keep an eye on them and this whole rally to me looks like it's just getting a little bit frothy, and I don't think anybody's going to want to hold anything over a 3-day weekend where we're closed on Monday and China opens on Sunday, and we'll be open on Monday evening as well on our side of the planet. So that could be problematic for long. So, and I think mostly all you're getting here, I don't really see anything to buy. I think all you're getting here is a big reaction bounce in the market. So it looks like crap to me, and I'm looking to mostly short it, and I've got a couple of shorts out that are working. Some that I've tested haven't really worked out yet, but that's okay. I'm ready to bob and weave with the market. So anybody got any good questions for me? Let's see. Let's look at some of these others. I mean, even Schwab coming down. Citigroup sells at about, I'm going to say what, about a little more than half of its book value. Bank of America sells at less than half of its, or about half of its book value. I think it's like 0.514, something like that. But you have to wonder why these stocks are just getting decimated, and why some of them are selling so far below book value. In fact, I heard one particular money manager, I think on CNBC, talking about how she was buying Bank of America in here because it's cheap based on a price to book ratio, which I think is somewhat naive, because I think that's telling you something. If a stock is selling below book value, what is that telling you? Questionable assets on the books, basically. And so I would look at it that way, rather than saying, oh, this thing is cheap. And doesn't this remind you a little bit of 2008, when we saw financials just getting shellacked and taken to the woodshed for a period of time ahead of all the chaos that then ensued. So I think it's a warning sign, and they've already come down a fair bit. So it's now a question of where can you hit them on rallies, and maybe that's a little bit. Now is not maybe the time right now, at least with the oil rally. Let's take a look at that. US. I mean, look at the rally here. You undercut this low actually, and now you're bouncing. So it's a pretty classic undercut and rally type move. Nothing really shocking. Pretty typical. SWH. You know what? I have a total of 11 names. Whoops. On my buy watch list, this is one of them, and I think it's because you did get marginal pocket pivot here. It's trying to turn. Whoops, I'm going to go to a weekly, but that's what it looks like. So that looks kind of interesting. Let's see. Some other things. Hawaiian Airlines, I've been watching. Airlines are trying to get going. Yeah, that's popping. So that's moving higher. You might look at some of these like JetBlue. Kind of down there. Love was a short, but it's still down there. So I think Hawaiian Airlines, which has been one of the strongest performing airlines, is probably the ticket here. So they're still pushing this. Look at this, up 251. This is so typical, the big algo market is what it is. And they just get things rolling after the forced selling is out of the way. You get a bunch of late shorts, and they're all scrambling to have to cover, and that's basically what you've got going on. So what else is that? Oh, I was looking at Angie's list. They're trying to come around in a base. They come out with earnings though in a few days, so I'm not sure I really want to play there. Let's see, Dow up 253 now. Keep on pushing. Let's see. Any other questions? Let me take a look at something here. Yeah, that's not it. Hold on a sec. Okay, let's take a look at some of these. NLS, maybe. Trying to form some sort of a base, I suppose. That's what it looks like on a weekly chart. So this is Nautilus. They actually have some decent earnings. Cray, this is one that had a viable gap up here, but it looked okay, like it might be holding, but now it's reversed today, so that's not looking so good. Kang was another one that was holding up there. It's undercut this low. There's been some talk of these guys getting bought out and taken private, and if they did, that would probably send the stock up, 10 to 30%. So that's been acting okay. Here, this is kind of the story of the market here. Aqua America, that's a water utility. AWK is a water utility. Cree is a name that I think I talked about last week, and it's hanging along the 28 level here. Maybe that's viable if the market suddenly finds its feet and goes higher. But this is basically what you're looking at. And I think it tells you something about the current market environment. There's nothing to buy. There's going to be a lot of these crazy reaction rallies to the upside, yeah, but there's really nothing in a really good position to buy, and even using roundabout pocket pivots, bottom fishing pocket pivots, ugly duckling type setups, there just really is nothing there, and it's just as barren as it could possibly be. So that's why my thinking is, okay, they're going to run this thing up for a little while. I'm just going to hang, maybe throw out some shorts, keep like a loss, a total portfolio loss of 1% maybe, if I'm going to test shorts here, and just kind of see what happens here. My guess is we're going to roll back in before the close, see if that happens. But it's just not a very good environment. It's very bear market like, and I would say also when you see all of these technology stocks, LinkedIn price for perfection. It's still selling at some ridiculous PE, just like something like Data, it's still somewhere in the 80, 120 level. It's Tesla that's like still 80 times earnings. And let's get real. We've talked about this one over and over again as a thematic short that probably heads lower eventually. And that's pretty much what's been happening. So it's difficult. You could have played it all the way down. Notice how it's followed the 10-day moving average all the way down, and just keeps going lower and lower and lower. So and then you read on seekingalpha.com all these guys trying to make excuses for the stock and talking about why they're going to deliver X number of cars. But if you look at, say, Toyota Motors, this stock sells at what, 8 times earnings, and they make money, and they show decent profits. Nothing huge, but they make a fair bit of money, and they sell a lot of cars, millions of them, and they're only selling at 8 times earnings. Now, General Motors arguably a lot cheesier, but they sell cars, and right now they're making money, at least as their accountants figure it, and they sell at 5 times forward estimates. So why does Tesla? How is Tesla going to have some amazing growth that's going to justify selling at 80 times estimates even at this price? I think not. Anybody following me on Twitter, yesterday I said short the stock here at the highs, 160 or so, which is basically the high here, and close to the 10-day line. Now the 10-day line's at 163.15, and it's rolling lower. And I would not be surprised to see this thing just keep going lower in a bear market. So you're in a bear market as far as I'm concerned. I don't really care about all these goofballs who want to define it as a goofball, like you're not down 20%, so you're not in a bear market, or the market now has broken its uptrend line, so it's now in a downtrend. All this other BS. I just watch the stocks, and the stocks are telling me that we're in a bear market, and we have been for the last several weeks. And you could argue that in a lot of these stocks, their bear market started back in July, August of last year. So, we're in a bear market. It's a bear market, okay? MOH. Deep doo-doo, ugly duckling. Now, that looks like a short at the 50-day line. So, you know what? I wouldn't try and buy this. I mean, that's silly. Even someone today was asking me, do I buy Intrexon? It's a voodoo pullback. Well, let's take a look at this. Volume is minus 23%, but it's not. It's busting the 50-day, and we talked about this thing last week. Yeah, it gets a pop on news that they have a remedy. I'm going to say a way of addressing the Zika virus. But basically, what they do is they own a company, so it's one of several companies they own, and this company is producing mosquitoes that are sterile, and they release them into the mosquito population. They decrease the number of mosquitoes that are going to give people the Zika virus. Big deal. You get a move if you can trade it, great, but you better know when you're good and when you're just plain lucky because you're chasing a news move, and then they bust it. It was the same thing. What was another one? Was it INO? Yeah, they also had, they're supposed to have a Zika vaccine. But I was reading in New York they're going to be vaccinating people for free. So, that sounds like a really profitable business. But again, it runs up and then it busts. And, if you think you're going to buy these and make a bunch of money, you might catch a trade if you can run it tight. But if you really think there's something thematic that you're going to chase, you're an idiot, okay? And I think it's just silly that people get caught up in this stuff. I mean, you remember Ebola? I remember this company, what was it? I think it's New Link, I think it was called. Yeah, New Link Genetics. Here's the Ebola scare. Zoop, there it is. Oh, but that ended quickly. And now look where this stock is. I think there was also Techmera, but were they bought out? Anybody know the symbol for Techmera, or did they get bought out? Somebody help me out here. How about you, Scotty? You seem to be vocal today. No? Okay. Let's go to what was also I think these guys also had a Zika, or I'm sorry, an Ebola cure. Maybe that's where they gapped up on the news, or in here. And where is this going now? It's going nowhere. Like I said, this is the kind of stuff that brokers like because their clients are dumb enough to call them and want to buy this or that stock because they think they've discovered something amazing. And brokers are more than happy to do business, especially this environment where people aren't really that interested in investing all that much. And I don't really blame them. Okay, where were we? What other one? Do you remember? Yeah, I remember this one, BioCrisis. This was a big one. Maybe this was the Ebola thing too, where it started rallying, but then it failed. And look at this big gap down. It's now $1.71. That's nice. But I remember back, I think it was 2006 when we had West Nile virus, and this thing had a big move. Do you remember this one, Dr. K? It was like, let's go back. I think it was 2006. Let me check. Yeah, there it is. And the thing had a pretty nice move, but let's kind of check this again. Okay, maybe now these banks are rolling over. JPM's starting to come in. It's pinching 57. It's up $4 almost. That's quite amazing. But anyways, this had a nice move, and this is West Nile virus, and then it hangs out for a while, and then it dies, and that's it. So, the moral of the story is don't be stupid. When news has already come out, yeah, you might get a little pop. Maybe you can play it if you're a very nimble trader, but for the most part, it's all just, you're late, and you're just reacting to news, and you're being a fool. So don't do it, okay? All right, what else? Let's look at some names. Starbucks. Starbucks is a recent late-stage breakout failure. Here's a trend line breakout. You can draw a line across all these tops. It broke out. It failed. Now you're coming up into these lows here from early January. You're not quite to the 200-day line, but I think this is a short if it gets there. Let's see. What else? Walmart. I don't know. Walmart lately seems to be like a safety, what I call a safety dance stock. I remember that song. What was that? Who did that song, Dr. K? And I remember you gave me a CD with a bunch of weird techno music on it, and one of the songs was Safety Dance. Who did that one?
Yeah.
Yeah, I always liked that song. I thought it was pretty funny. But now I refer to stocks when institutions are trying to allocate money somewhere where they don't think they're going to get their head ripped off. They go looking for safer names, low PEs, established companies. So Walmart, which has been beaten to a pulp, we can see on the weekly chart, that was beaten to a pulp. I would say that qualifies as pulpy down here. It's trying to rally, and I keep shorting it at the 200-day line. I get a buck or two out of it, but that's about it. And it hits the 20-day line, and it doesn't want to go down. First hitting the 10-day line, now the 20-day line, just bouncing off it. So maybe eventually it breaks, but probably that's only going to work if the general market continues going lower. So watching Panera, we're offered at $199.89. So it's basically right there. I got to think this thing is going to fail. I mean, they came out with earnings recently, and a couple days ago. That was a cause for the big pop here. 844. That was the cause for this pop. I actually shorted into this near the breakout point. It did work. It came in a little bit, but that was a cover yesterday down around the 50-day because you weren't getting a lot more selling. And when the market turned, I just cover all my shorts when I can see the market turn. And actually what I did yesterday, once I saw the market turning, I think I IM'd you on this, Dr. I went heavy short Agnico Eagle. Mine's around 36. And it came in this morning, I covered it. Went down to 34, I covered it. What's interesting though is it's almost back up. It's back over 35 and it's almost unched for the day, unchanged. And I gotta think that that's not a good sign for the market. It's telling you that there is still nervousness out there, and the golds are holding up. So I'm not sure if you can make money in the gold miners. They'll be leveraged to the price of gold. In other words, for every dollar or percent that gold moves up, they'll probably move up 2 or 3%. So you get a little more leverage if you want to play a gold move, but you do have to be nimble. Now, if I had any brains, when I covered my short this morning near 34, I would have turned around and gone long, but I wasn't really thinking that way. I was more watching Facebook because I think that is, like I said, it's a late stage failed base. I think another visit, at least down to the 200-day, is coming, and so I want to try and hit this one up here. 103, 104 is my target area. Maybe it could get as high as a 10-day at 106, but so far now we're up 74 cents as I speak, and it looks like it wants to reverse. So you can see today's rally is primarily all about financial stocks, mostly. That's what I see. And they're all moving. Now let's look at another one. Expedia was one. I did short this one and take a few bucks out of it. It was shortable again this morning, and it's coming in. This whole group has been in trouble for a while. Priceline, Expedia, TripAdvisor, and I've been talking about them as a group short. And you can see the breakout attempt here, or actually not even a breakout attempt. It just fails from this late stage base and heads lower. And now you're rallying back. Notice how you're rallying into the lows of this base over here. So that, to me, 105 becomes a point to look at shorting it. And I know it's beyond the moving averages, but when you get into what I refer to as the no man's land, in between the moving averages, so here you're between the magenta 10-day, the green 20-day exponential, the blue 50-day simple, the 200-day is red. When you're in between all of those, I start looking for other areas of overhead resistance or supply in the pattern, and so you have it here. So that's why 105 became a spot to look at it on the short side. And then what I was doing yesterday, let's see if I can find this. Where is this? Let's see. This would have been yesterday's action. You had an intraday breakout attempt here. Here's where you open up right here. This is 6:30 my time right here, where this big volume bar kicks in. You break down, you turn and you rally. You have an intraday breakout. The stock's gapping up on earnings, okay? And so you have this intraday breakout. And one thing I've watched for on my 620 charts, on the 5-minute charts, are intraday breakouts that fail. Because a lot of times that'll be a spot where you can hit a stock short before you get the MACD and the moving average crosses. So I watch for that. And that to me, that seems like thinking like an algo. In other words, algorithms could create breakouts and then they sell into them because that'll bring in buyers who see a breakout as something to buy still, even on an intraday basis. So that's one way I'll come after a stock. And you can see the same thing happens today. On the opening, it's up and immediately it fails. But notice I was trying to clear these highs from yesterday and that just fails immediately. You get a 620 at 103. Sell signal, you already have the MACD cross here and you're heading lower. And that's breaking. Now yesterday, if you were real smart, and this is something to think about, when you see a particular stock rallying on, I'm watching Facebook now at 40 cents, coming in fast. When you see a stock in a particular group rallying after earnings, go look at the other weak stocks in the group. So when I see Expedia rallying, I'm looking at Trip, and it punches right into the 20-day line. Could have shorted it right there, boom, comes right in. That's a nice 10% break in a couple of days. The other one that's still going, it's not giving up yet, but it is approaching a point where it could possibly be shorted, is Priceline. And you're seeing here, it's right at the 20-day moving average. That's what it looks like on the 620. You did have a sort of a fake out signal here. So a lot of times if I take a position on this, I actually won't I won't short it on the cross. I'll look for some sort of a bump and short it a little higher. But if it starts giving me a buy signal, I may just back away. And I think maybe that's what you're doing on this one. You're bobbing and weaving with it. But I got to think this will give way eventually as well. So, they're still punching the financials. Looked like JP Morgan was going to roll, but it's not. Facebook, or fake book as I like to call it, 102.46 on the bid. Panera pushing up against 200. Not quite there yet. Let's look at the 620. Yeah, it might be getting a little bit long in the tooth. So I think at least you could throw a short out here and use it like 201, 202 as your stop. That's pretty tight because you're talking 1-2% max. SQ deep doo-doo action. Yeah, you know, now you're just trying to catch falling knives. I wouldn't touch that. It's a piece of crap, and it's an infinite PE stock, okay? What did I just talk about? You're in an environment where PEs are contracting. The market does not tolerate high PEs, and infinite PEs are definitely high PEs, if not worse than high PEs. So, you know, I would not be looking, other than if you can catch a sort of a reaction bounce, which to me is just lucky if you do. There's nothing concrete about it as a long setup. You're just catching a big gap up in the market and you get lucky. So, you know, that's about all it is. But I think you definitely have to keep in mind that we're in a bear market. I'm going to say it. We're in a bear market, and we have been for some time, and the action of individual stocks confirms that in my mind. We're also seeing how high PE stocks are getting decimated, from LinkedIn to Tesla to Data to Splunk to Workday, you name it, which is telling you that we are in a contracting PE environment. That is typically a bear market type situation. That's another piece of evidence that tells me we're in a bear market. So we know the market's not going to tolerate high PEs. So why do you want to go after a high PE stock thinking it's a deep doo-doo situation? You know, one of the problems with a lot of the stuff when I teach people stuff about ugly duckling setups or things like that, they want to start applying it to everything. Like the other day I had somebody asking me whether LinkedIn was a buy based on the $100 century mark. What? Since when have we ever talked about a stock declining to a century mark as being a buy? So what happens is it's this whole principle of a little knowledge is a dangerous thing because people get some concept in their head and now they want to apply it to everything. And that just tells me that you lack judgment and you lack experience in applying that judgment. So I think in this point, this thing is selling at, what is this thing selling at now, Dr. K, in terms of the forward PE? Let's
Check real quick.
have it here. No, it's so high, they don't even have it here. What is it?
PE is, well, it says it's 32 on
32
LinkedIn.
times estimates. What's the most recent growth rate?
52% in the last quarter.
And
But
the
going
numbers
forward,
so apparently
going forward, it's
that was not cheap.
15% that
Somebody's asking if China market is closed, why is FXI rallying? Hey, Dr. K, do you know that? I'm not an ETF expert. I don't really pay attention to ETFs. Dr. K, you know why that's happening? They're trading the FXI, I guess. Go ahead.
What's the question?
Well, if China is closed, why is the FXI? I have a chart of it up here. Why is FXI up today?
Oh, because it still moves in line with the other markets because markets correlate.
Right. So, but it's not. It doesn't trade on the Chinese markets. So it trades on our markets. So you know, it's not really related to that. So, anyways. Let's see. Let's take a look at some of the big stock names, the NASDAQ names, because these are the ones that have been hit the hardest. And I think in any rallies, you have to look at them as potential shorts. I'm looking at FB, Facebook, trading 102.07, now up 16 cents, 14 cents. It's probably going to turn red here. That's my big short right now. It's the only one that's really working. McDonald's I have short too, so I got it up at like 118.20. And it's coming in. I think the high was 118.33. It's barely working. So, but let's just go down the line here. LinkedIn, I'm sorry, Netflix, a total bust. We talked about it as a short up here. I think we put it out in a pre-market report. And you know, if you think about it, when it comes to sending out short sale reports, I don't like to throw out a whole bunch of them. Dr. K and I have tried to be very selective on a very select few and try to time them right. And I think we've done a pretty good job with Apple, Tesla, and Netflix, and then most recently Avago. And we're going to continue doing that. If you want more short selling ideas, you're going to have to be on these webinars, which of course all you guys are, and you know that you've been getting a lot of ideas. Hopefully some of them help you make money. Here comes Fakebook up a nickel now, so But that, I would 93.76 might be at the 20-day might be a place to short it. You notice that once it breaks down, they tend to follow either the 10-day or the 20-day on the downside. I like to use a 20-day because oftentimes the 10-day is too close in terms of finding a rally that you want to short into. So, that's what I'll look for. If we look at Amazon, I think Amazon is coming up into shortable area at the 10-day line. The next spot, since the 20-day is above the 200-day, the next spot would be the 200-day. Now, they went and announced, I don't know, $50 billion buyback, I think it was. Don't quote me on that number, but there goes fake book, now negative. I think it's heading to 90, personally, but we'll see. But that's actually like 1 or 2% of their total float. So to me, it's not a huge buyback. So this looks shortable here at the 10-day, using the 10-day line as a stop. Microsoft, pretty soft. This looks shortable to me here. It's just kind of stalling. It's been bouncing off the 200-day after undercutting this low here. You see that? So you get the undercut and rally. Could carry further to the 10-day or the 20-day. That would be the juiciest spot to short it. So I'd be watching for that. Apple, Apple's kind of right now just hovering below its 10-day line. Notice how it ran into the 20-day. So I like to use the 20-day line as my initial short selling point, although depending on if the 20-day line's too high, then I'll go for the 10-day, like with Amazon, for example. But here, this thing's in a bear flag, and whoops, where are we? And it's undercut these lows way over here. It's bouncing along the August 24th low, and I got to think this is heading lower. So it's just a matter of when, so not if. And you're in a bear flag, so you might try and use rallies up to the 20-day line if you get them. Otherwise, you could short it here and use the 10-day line as a quick stop and then look to re-enter if it pushes further into the 20-day. But it's just basing. It's in a bear flag, and it's only a couple of weeks long, and it's going lower. That's what it looks like to me. You can massage it any way you want, but it's going lower. So what do we got? We got Priceline at the 20-day. We've got Amazon at the 10-day. We've got Facebook at the 50-day. We've got McDonald's at the 50-day. We got the banks are up, and we're looking for them to kind of peter out here because I think financials remain weak. I don't really think a 5% rise in the price of oil solves the problem they're going to have with a lot of this unserviceable oil debt that they hold. So I think any rallies just become either, if you're long them, opportunities to sell and possible short sale opportunities, but you've got to be on them correctly. So, and like with JP Morgan, I'll come in and hit the stock at the open. It starts to come in, then it turns against me, and I'll back away, and then it'll run up, and then I'll look for another spot later in the day. So you're up here now, and you may be getting a little stretchy here. You see the MACD stretch down here, and you just cross, so maybe it's getting ready to roll over. So I got a small position in this thing right now, like 3,000 shares, so it's pretty tiny, but I'm looking to go medieval on it if it starts to give me a 620. So, and I'll just kind of put out little bits as it rallies, and then I'll have sort of an uncle point where I'll just bail out, or I'm looking for a failure where I can get really heavy on it. So, any other questions? Just feel free to pipe up. Here's Verisign. I've been looking at. I'll show you some that I've been looking at that look like shorts. This thing looks like a head and shoulders. Here's the head. You can see the fractal head and shoulders here, and it fails through that on a neckline breakout. And now you're rallying into the 20-day. You actually see how you find support or resistance along these highs on either side of January, February here. And so when you are going past the moving average and you see something rallying past the moving average, and this is similar to what I was showing you on Expedia, look for a potential technical area of resistance. In other words, price congestion or overhead, prior highs, etc. And in this case, you do see that you push right up to the highs, and then it's coming back in. So that's one I've been watching. This one too, Avnet. I don't know what this is, but it looks like a piece of garbage to me. Look at this pattern. That's it on the weekly chart. But I'm seeing like double pods and head and shoulders and all sorts of things. I'm seeing also a ducky and a doggy and a rabbit in here as well, if I look really carefully and squint. But in any case, it looks pretty gross. And this rally in the 20-day might be shortable. It trades 1.2 million, so it's not the thickest thing in the world, but it might be shortable. Let's see, 859. About to wrap it up. What else we got here? Let's look at Palo Alto Networks. This is another one that's been pummeled. Earnings coming out, I think, next week or the week after. But you'd want to watch for any rally up into this level here, close to the 20-day or maybe even the 10-day as a possible short. But again, this is a high PE stock, and look what they've done to it. Okay? Even with the IRS announcing that they had another security breach. So, you know, nothing comforts me more than knowing that the incompetent government is guarding all of my personal data over at the IRS, you know. But what do you expect? Of course, we need more government, right? Let's see, what else? Baidu is another one I've been keeping an eye on, rallying up. This has been an ugly pattern for a while. It fails here, rallying to the 20-day. I mean, you can look at all of these. Intel's another one. Rallying, okay. What about some other chips? M-chip, that was a short up here at the 20-day. Might have talked about it last week. Linear Technology is another one. That's in a shortable spot here, right at the 50-day. And that's what that looks like on a weekly. So there are some ideas here if you want to venture on the short side. Otherwise, what I would do is just pick a small handful of names that you can watch carefully and then just keep a close eye on them. I think they're going to take this thing down by the close. It's not going to be up nearly as much as it is now. So I've given you a handful of ideas you can act on. Meanwhile, you can see that I've got 11 names on my buy list. I've got something, I think 68 on my biggest short sale watch list. And a lot of times when you get that sort of imbalance, it's telling you're at a low. But the other thing it'd be telling me is that we're in an exceptionally crappy environment. And that's the other thing you have to be watching out for here. And the idea that you're just going to buy any stock that's down there because you can slap a deep doo-doo label on it in sort of mindless fashion, I think is just asking for trouble. So be careful. Hopefully I've given you some concrete ideas here to approach on the short side if you want to. Otherwise, cash is king. There's no reason to be trying to play the long side or being a hero on the long side. Cash is king. This is a dangerous environment. And let's see, gold. What's gold doing now? Is it rallied back up? It's down 80 cents on the GLD. Take a quick look at... guys, you can go to investing.com and they have actually live commodities quotes. You can also get live futures too, so you don't have to pay for this stuff. You know, don't be silly, don't pay for it all. Gold is 1237.20, so it's down 10 bucks, 10.60 today. But it's holding up. You know, you're not getting much of a pullback, and I got to think that in the midst of a big rally like this, that's probably not a good sign for the market, but we'll see. So, any final questions before we sign off? Nope. All right, you guys are speechless today. Anyways, as always, thanks for showing up. We got a long weekend, so enjoy it, and we'll see what happens next week. Should be interesting to see how things pan out. So we'll catch you next week. Have a great weekend.
Take care, everyone.